When Chinese stocks won admission to MSCI's indices last week, Australia was not the first market many people then looked to, but it is arguably one of the most affected. That's because in the broader Asia-Pacific region, where investors typically put Tokyo in a category all of its own, wins for the weighting of Shanghai and Shenzhen will come at the expense of Sydney, and is already the region's worst performer this year. The geographic centre of Asian market capitalisation, excluding Japan, has been shifting northward for decades. From a point just east of Darwin in 1975, the midpoint is currently over the South China Sea and should reach Hong Kong by 2030 as mainland markets increase their share of these regional benchmarks. By that point, Australia's weighting in those same indices will probably have halved to about 6%. But that long-term gloom is not the reasons for this year's underperformance. The ASX 200 has added about 1% this year, compared with gains of 17% for Hong Kong, Seoul and Mumbai. Australian business optimism is strong, but consumer activity is not, and growth of 1.7% is the country's slowest since 2009. Meanwhile, earnings downgrades have begun once more to outnumber upgrades, just as profits elsewhere in the region are picking up noticeably. Earnings in Australia are forecast to rise about 11% this year, but 19% for Asia-Pacific excluding Japan. For the past decade, Australia's consecutive booms in mining, housing and now infrastructure have helped Sydney-listed stocks keep up with their faster-growing emerging market rivals. Now it needs another catalyst, and it's struggling. The Aussie dollar, whose weakness flattered international returns for the past 4 odd years, appears to have found a bottom. Soft commodity prices and a heavy new bank levy are hurting the heavily weighted resources and financial sectors. In spite of their doldrums, Australian stocks are still trading on 15 times expected earnings versus 13 times for the region as a whole. Downsizing Australia's regional weighting will be very slow and gradual, but it's yet another reason for international investors to think carefully about where they place their bets in Asia Pacific.